every company, look, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. So I think we're very early. I mean, not even 0.1% of companies are doing this, right? So, I mean, if you're less than 1% adoption, you're still pretty early. But you've got about $700 billion of money in the institutional market that could be invested in commodities like Bitcoin. So there's 100x more money available for credit or equity.
Most of the world still keeps their wealth in cash, bonds, or stocks, and that's why Michael Saylor says we're still very early with Bitcoin. He points out that global adoption is below 1% out of 8 billion people and 400 million companies. Only a tiny fraction are on the Bitcoin standard. That means 99% of the world hasn't even started accumulating yet, leaving massive room for growth. Saylor compares this moment to the early internet, before email was common or websites became essential. Right now, Bitcoin still feels optional, but he believes it will become inevitable for individuals, businesses, and even governments. And as adoption rises from just 1% to 5% or 10%, the repricing could be explosive, multiplying Bitcoin's value many times over. He also highlights the bigger picture. Bitcoin has the potential to absorb trillions of dollars in global capital. That's why even owning a small amount today could prove life-changing in the future. For Saylor, the opportunity is clear. The world hasn't begun moving in yet, and those who act early will be best positioned for what's coming.
I think in the modern world, the best conception of money is that money has a medium of exchange component and it has a store of value component, and you have a unit of account for the store of value and a unit of account for the medium of exchange. So the right metaphor is just think of the dollar versus BTC, or checking account versus savings account. And so you're going to have sort of high speed dollar type instruments to price things in day to day. And then you're going to have another capital asset that you're going to use to store your value over the course of 100 years. And I think that it's like, I don't run a country, so no one's asking me, but I think it would be a mistake to try to establish a currency with a capital asset. For example, you don't really want to price all your sandwiches in New York City real estate. Nor do you want to price your sandwiches in ounces of gold, nor do you want to price sandwiches in Picasso paintings, right? I think that you've got capital and you've got currency. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar or the Naira, like something which is inflating at 14% a year or 30% a year. I think you've got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency. It's not a weak currency. It's a capital asset. I think that that you have a few currencies that are kind of pegged to the dollar that are struggling on, and I think you have a lot of currencies that are collapsing against the dollar. And then you have the dollar. And so if the stable coins succeed, and they're going to succeed, if the U.S. passes the Genius Bill, and then U.S. corporations and banks are able to issue stable coins backed by U.S. dollars, then that market's going to go from 250 billion to $1 trillion to 2 trillion to 4 trillion to 10 trillion. And you have to ask the question, who's going to be buying it? And the answer is people that might have otherwise had rubles or CNY or every African currency and every South American currency. So I think the weak currencies of the world are going to gradually be marginalized. I think that the dollar will grow. I think weaker currencies will be marginalized. I think that there are 400 million companies in the world. and there's 40,000 big banks in the world. So I think that, and of course there are lots of institutions. So I think that as Bitcoin is integrated into the fabric of the global economy, I think you'll see, right? How about 1,000 banks that are actually trading peer-to-peer with each other? I think that the banks, the custodians, megacorps, I see a world where every major bank and every major tech corp, maybe a Google and an Apple and a Microsoft, they're all settling or moving large amounts of Bitcoin around on the base layer. Governments, you would think that the biggest users of the base layer would be Apple and Google and the US and Bank of China and Bank of Russia and Bank of England. To the extent that any of those things exist, right? If the nation exists, if the bank exists, you would think that Citi would be moving billions of dollars of Bitcoin to B of A, to Wells Fargo, to Santander, to Deutsche Bank, to Swiss Bank, to Bank of Japan. I would think that Microsoft will move billions and tens of billions of Bitcoin between Microsoft and Google in order to work through some, technical issue. I think I think Visa and any of the payment networks, they'll have massive amounts of Bitcoin. So I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, the base network is going to have 10 to 100,000 big financial institutions.
Cyber criminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
That are going to be settling large amounts. And I think the network's going to scale in the layer 2s and the layer 3s. I think the Lightning network is going to end up being a high speed, high frequency, lower value settlement network that will stitch together 100,000 or 1 million websites or 1 million mobile apps. Or you could imagine everybody with a mobile app that has payments built in. At some point, they might go peer-to-peer. They won't do it on the base layer. They'll do it on an open protocol layer 2, most likely. And then there'll be like massive competition between Coinbase and Cash App and all the traders and the banks and the high frequency, traders and the next person running MasterCard or Visa. And they'll try to create these layer 3s. Mm-hmm. And they'll have a layer 3 protocol, and maybe Binance wants you to move it on Binance, and Visa wants you to move it on Visa, and Coinbase wants you to use their network, and Cash App, and then Microsoft and Apple Pay, and all these other tech networks. They'll be layer 3s, and if 1 billion people trust Apple, with their credit card, maybe 1 billion people will trust $10,000 worth of Bitcoin to Apple. And then maybe there'll be some successor to Apple, right? Like Tesla bot or something. So I think that there'll be a a huge amount of transactions, billions and billions of transactions a day, probably billions an hour on the layer 3s, probably billions a day on the layer 2s. And then you're going to have the same number of transactions, on the layer 1, far fewer. And those will be $100 million, $1 billion type settlements, between the mega institutions. And I think you'll probably see Bitcoin security and Bitcoin credit type ideas built into a lot of financial and technical applications. And there'll be new applications, new use cases that we can't even conceive of right now, that will maybe for cybersecurity or social security or something else that will grease the wheels of digital commerce.
Michael Saylor argues that most people still misunderstand Bitcoin. It's not a currency for buying coffee, it's digital capital, a long-term store of value designed to preserve purchasing power for decades. Just like you wouldn't price a sandwich in New York real estate, Bitcoin isn't meant for everyday transactions. Instead, fiat and stablecoins serve that purpose, while Bitcoin functions as the ultimate savings layer. He adds that we're still in Bitcoin's dial-up phase. Out of billions of people and over 400 million companies, very few use it for serious settlement today. But that will change as banks, institutions, and tech giants begin moving billions through Bitcoin's base layer, while everyday payments happen on faster, scalable Layer 2 and Layer 3 networks. When this shift happens, Saylor believes Bitcoin's upside could accelerate far beyond anything we've seen before.
I think the most exciting thing going on right now is the issuance of BTC-backed equity and the issuance of BTC-backed credit. Because you're talking about $100 trillion of equity and credit that's discretionary. So if I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement, because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. So I think that that's a very powerful dynamic. And once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week. And the same with BTC-backed credit. If you look at all the credit instruments, all the preferred stocks, all of the fixed income, all the annuities, all the corporate bonds, all the high yield bonds, the junk bonds, all the investment grade bonds, all that huge amounts, it's all going to be recapitalized or reconstructed on a Bitcoin standard that's bigger than the equity. And so I think that there's a digital transformation of the capital markets going on right now. And it's profound. And what it means is a company like Metaplanet can go from being worth 10 million to being potentially worth 10 billion in a couple of years. So show me a better idea. How do you go from 10 million to 10 billion in 24 months or 36 months? It's not very common. So I really think that's the part that's underappreciated. I mean, people in the business staring at it. Like literally, most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. Right? That's the irony to me. So, and I think that's because, again, their metaphor is they're looking for some technical widget to create instead of reconceiving the way that wealth is stored. If you're looking for the technical ideas are just harder. They take a lot more work. I mean, eventually you would think that Bitcoin is the basis for all payments, via something like the Lightning protocol. And so clearly the Internet of Money, that's a cool idea. It's a lot of work. It's going to take a while. And then I think Bitcoin is the basis of all identity and authentication. It's another interesting technical idea. presumably public-private key cryptography on a Bitcoin network, it ought to, it ought to replace most of the forms of authentication and identity and verification in the world. So I think that those are two technical dynamics that are operating, but on the other hand, if you launch 100 companies with those two ideas, 99 out of 100 are going to struggle, and one will achieve something maybe. Whereas I can take a dying hotel or a dying restaurant chain and I can make it worth $1 billion just using Bitcoin as digital capital. And on the margin, it's more likely to work than not. And so I think that the really big compelling ideas are the monetary ideas, or the financialization of Bitcoin, the securitization of the network. I think the technical ideas will probably come later. They will come. They're coming. David Marcus is doing a great job, with Spark, and Light Spark. I think it's very interesting, and they're having good progress, and I think we'll see a lot more things like that. But those are a little bit more difficult to forecast because of the vagaries of technology entrepreneurship. Every company, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. Now your next question is, well, is there anything I can do that's better than that? Well, there are a lot of other twists to it. If you take a private company, take it public, right? You add value. Now, all of these companies are competing to do something. The issue is, what's the something? And it depends on the company. So I think we're very early. I mean, not even 0.1% of companies are doing this, right? So, I mean, if you're less than 1% adoption, you're still pretty early. There's a lot of different business models you can pursue. If you're a private company and you're raising $10 million in order to fund operating losses, you could just raise 50 million and buy 40 million of Bitcoin and fund 10 million in operating losses. And I would definitely recommend that. That's better, right? Mm-hmm. Right. So every private company can do that. Now the question is, can you raise the money? Okay, well, it depends on who you are and whether or not we like your company and whether you're trustworthy. So this all becomes an exercise in capital raising.
Michael Saylor says there are two things you must master to succeed today: AI and Bitcoin. AI, he argues, is essential for career survival, while Bitcoin is the foundation for building future wealth. Instead of relying on traditional investments like mortgages with small yields, he urges people to raise capital, use responsible debt, and convert it into Bitcoin, an asset he believes can return 55% or more. With fiat currencies collapsing and capital flowing into Bitcoin at record speed, Saylor warns that those who wait could be left behind. The message is simple: AI will shape how we work, and Bitcoin will shape how we build wealth. Together, they could define the next era of opportunity. But only those who act now and embrace this shift will be positioned to benefit in the long run. Do you agree with Michael Saylor that AI and Bitcoin are the two keys to future success? Would you take on debt to buy Bitcoin, or do you see that strategy as too risky? Let me know in the comments. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.